Welcome back, folks. In this video, I'm going to walk you through the two trades that I did yesterday on Friday, and then I'm going to walk you through the easy short trade opportunity that was available in New York yesterday. I did not take the short, okay, and we'll talk about that in a moment. So the trades that I have done yesterday, as usual, they are posted on my Twitter profile, okay. I did an Asia long trade, okay, so I was only looking for longs in alignment with my directional bias. So go and look at the previous videos to identify why I was directionally bullish, okay. So this is the trade I'm going to walk you through, the Asia long trade, okay, and the New York long trade, okay. And I'm going to show you how you don't have to trade the news, right? Okay. So let's look at the charts. Now, I've already, on many occasions, communicated the time that I trade in Asia. It's 9:30 p.m. I do take trades at other times in Asia. You've seen me do a trade prior to the open of Asia, pre-market, 7 p.m. But the best time to trade the Asia market for gold is 9:30 p.m. Okay, so this here, I was watching this, and this actually took me by surprise. I wasn't expecting such a big move down. This was all prior to 9:30 p.m. But look where, look at what the market did. You get this. Asia opens at 8 p.m. And there's always, if you look at each session, the Asia session, the London session, or the New York session, you'll always find, in most cases, that first hour is the manipulation. Okay, so look at what Asia does. 8 p.m. starts here and it goes up. That's the manipulation, right? Then it consolidates, and look what happens at 9 p.m. You get a move down. Everybody's shorting this market because this market is moving so fast that it feels like the market's crushing. I'm watching this live. I know this is not, I know this is manipulation on the way up, manipulation on the way down. I'm only looking for longs. Sure, this could have been the real move, okay? And maybe at 9:30 we could have been lower, okay? But I wasn't really looking for shorts because a lot of liquidity was still residing higher, not just the very highs at the top. So if I look at a 15-minute chart, okay, let me actually open up a new window so we don't lose where we are. So this is the 15-minute chart. This is the down candle we're talking about on this 1-minute chart, right down here. Everyone's shorting this, but at that point in time, there's liquidity that's still residing above. So this is Thursday overnight trading. I mean, for me, Asia has the first session of the day. So for me, Friday has opened. This is the first trading session of Friday, even though this is Thursday night, okay, New York time. But you can see that that's Asia, but the previous New York highs are still intact, okay. So that means that the high of the week is still intact. So any move down is not a short. It's the manipulation, right? And if you look at this on a 15-minute chart, we're just going into this gap, okay. But you don't need to know that where you're going. It's irrelevant. I do try and identify where is that draw on liquidity, but you don't need it because you're waiting for time, okay? So on that 1 minute, as this is going down, I know that everybody's short. I myself have identified that as the manipulation. Now, it could have gone short. It could have continued lower. That's fine, but I'm not going to be trading that short, okay? I'm not looking for a short. I'm already directionally biased to the long. Even on this particular day, we've got previous session New York highs intact, high of the week's intact, and just on a higher time frame, as you know, I'm looking for these highs, okay? So for that reason, I'm not interested to short this market. If I'm going to short a market, it's going to be the highs, not on the way down like this, okay? So as this is coming down, I'm looking at my 15-minute chart, okay? I'm trying to work out where could this be going, okay, to either take out liquidity, which is all these lows here, or to rebalance, or to even stop out these lows, okay? And as I said, it doesn't matter where it's going, but I'm trying to work it out, and I've identified this gap on the 15-minute, okay? And then I'm just waiting, so it's come down into that gap. This is now the 9:15 to 9:30 candle has now opened up, right? 9:16 means that second candle, 15-minute candle, has now opened up. And I'm going to trade at 9:30. So I can see that it's tapped in to a level where we may get a reversal from, and we do. That 15-minute fair value gap and order block, right, has been tapped into. All this liquidity has been taken, okay? And we start to see a reaction from there. That doesn't mean I'm automatically going to long. This will just come up here and continue going down. I'm looking to see what's going on at 9:30. Because that's the time for me to trade the Asia market. I'm loving this because it means that if I do get in, my targets are going to be at the highs, okay? So we make this low, we come up, and right there is a 9:30 candle, right? It's up high. So I look at that and I think, well, I'm looking for bullish entries, okay? 9:30 is not somewhere low coming into a order block for me to go long from. It's up here into this fair value gap. And I'm thinking, okay, well, I can't long here. That's a resistance level. So the only place I can long is at a gap, okay? So I mark at the gap. I want to see Asia get into that gap because that is a bullish signature, right? That's the bullish signature at my time where I want to see a reaction, okay? So I'm going to walk you through my exact thinking process, okay? So I'm watching this. Now, this is the 9:30 candle, and I've spoken to you about candle formations, right? How to read the tape in my previous videos, where what I want to see is that this 15-minute candle opens up and it's going down, I want to first see that it goes into a fair value gap, because that's my bullish signature at the right time, inside the 9:30 p.m. candle. Now, as this is going down from this fair value gap, the short sellers who have missed this move are thinking, okay, we've come into resistance, we're going down, this candle's dark, 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 dark. As I've said before, I'm watching these candles. I understand how these candles form. I want to see this candle turn around halfway into that 15 minutes of that 15-minute candle. That means 6, 7, or 8 minutes, I want to see it come down and start to turn around. Because what that does on our 15-minute chart, it creates a pin, right? If I show you, it's a second 15-minute candle, this one there. You see how it's created, this is the candle, right? It's gone up. It's at one point, this candle was fully dark. That's the fair value gap, that pink shaded area. And after 6 or 7 minutes, I want to see on a 1-minute chart, it start to turn around, leaving this pin, okay? And that's what we see. It's coming into a fair value gap at 9:30 and starts to turn around, okay? And that's basically when I got in, okay, around that level. What's this? 2439. So if you look at my entry here, where are we? There we go there. It says 2439, okay? That's what I've chosen. Obviously, marked it out there as well for you. That 9:30 p.m. candle coming into the fair value gap and then turning around, okay? That was the basis of that entry. Now, my targets on this trade were up here, okay, above. That's what my targets are going to be. You can see that, you know, we smashed through that target. I did take some off at 50 pips, which I normally do. You can see there's some taken off earlier, some taken off later. And in fact, there was another one I took off, I took that off even higher, okay? Coming into a higher time frame objective, 50% of that wick, the midpoint. That was the runner that I had on. I took that off later. That was before the open of New York from memory, okay? Now, something that I saw on this chart, which was very interesting, and one of the reasons that as it moved up into key resistance levels up around these highs, I took off a portion, right? That first portion that I showed you, I've taken off earlier before I got to the highs. Those two there, right? That, what's that? That was a 10 lot, 2 5 lots. I took them both off before we reached those highs. So before we even got up to here, I've taken off 2/3 of that position, right? So it was 3 lots of, it was 3 5 lots. So 2 of those 5 lots I took off here, as I've shown you there, right? Those 2 5 lots I've taken off at those highs, somewhere around about there. Did not wait to breach the high. I'm going to tell you why in a moment. And then the final lot I then took off after, okay? That 5 lot there. So it was 3 5 lots, okay? Now, the reason that I took off my position before it reached the high was because what I noticed was that this moved down, right? This is that 9 p.m. move down on a 15-minute chart. And this was kind of the stop hunt for anyone that was long from there. This was equal lows. It was the cleanest equal lows I've ever seen. Okay, let's take it from there, right? And so there was a good chance that as we got to back up here to fill the gap, we could come back down. Okay, so that's why I took off the majority of my position on that Asia long, because I was concerned that having seen these equal lows here, that we may come back up and come back down before going back up again. But I kept on a portion in case that didn't happen. Okay, and it didn't happen. It did not happen. We continued going higher. Okay, so that's why I like to have a runner on. Okay, now that was interesting because that was so clean that I thought, okay, you know, today's Friday, and I'm expecting the day to get above the high of the week, right, and potentially above the high of the month, and then have a pullback. And this equal lows was my first indication that, okay, that's probably in play later today. Not that I took any shorts, but that was something that I had noted quite earlier on in the day. Okay, now let's talk about my long in New York. That's this trade here, okay? Now, so there's a couple of things that I did on this trade which are important to talk about. One, we're trading the news, right? I'm going to talk about how I got this sniper entry in a moment. We're trading the news, so there's going to be a lot of volatility, and there may be a big stop hunt lower before the market goes in the real direction, okay? I'm already, from a directional bias perspective, I am bullish, as explained in the previous videos, because I'm looking for the high of the week to be taken, okay, and potentially the high of the month to be taken. But I need to manage my risk, so I drop down to a 3 lot. Okay, normally I'm trading 10 lots, okay, or 15 lot or 20 lots, okay, split across 5 lots each, so that I can manage each portion of that 10 lot or 15 lot or 20 lot. In this case, I just took a single 3 lot, so that's, you know, 1/3 the size that I normally trade. It's a trade I'm doing in line with my directional bias, okay, and it's a trade that I know there's liquidity above, where we haven't taken out the weekly high yet. At a minimum, we should be taking out the weekly high or the current high of the current day at a minimum, right? And then obviously secondary, the monthly highs, okay? So that was the long, I managed my risk as I was explained. Let's talk about the entry, okay? So my entries are typically on the 1-minute chart. You know, I'm looking at the 1-minute chart at that time. So I know news is coming out at 8:30. You can see London, I didn't trade London at all. Look at the consolidation. And that's very similar to the previous news release we had earlier, where London is consolidated, and it wasn't until news release that we had the moves. It's very common to see London consolidate prior to 8:30 news. So I'm watching now the market, okay, and I'm waiting for 8:30. Okay, I'm waiting for 8:30. Where's 8:30? Here we go. Where are we? So this is all the London consolidation. Okay, I'm just sitting here waiting. Now, here's the move. This is 7 a.m. Okay, where's 7 a.m.? 7 a.m., which is the start of the New York session. Okay, market starts to go down. Right, I'm bullish on the day. If we look at a 15-minute time frame, where's 7 a.m.? Okay, there is 7 a.m. Okay, we're above these highs. Okay, 7 a.m. is the New York Open. Okay, so at 7 a.m. we start to go down. I'm bullish on the day. Okay, so we've consolidated. There's a lot of liquidity above and below. At 7 a.m. the market starts to go down to take out all this liquidity. I'm already expecting some kind of manipulation before the news. Okay, so I'm expecting this move down as the manipulation starting from New York Open, which is 7 a.m. So we see the market go down. Okay, and then we have 8:15, which is the 15-minute candle prior to the news release, which is 8:30. Now, you don't have to trade this. I'm going to show you a really easy way to be in the market without risking this volatility injection, okay? Because before this real move that moved up, you could have a 50 pip move down, right, to take out liquidity, okay? So I am watching this on a 1 minute, and we're getting closer, and we're getting closer. All I'm doing is I'm trying to identify where are there fair value gaps, and where is there liquidity where the market needs to go below. A lot of liquidity here, okay? I see this low, and I see this gap. And you've seen me do this many times, but I try to identify a level where I might be targeting for a short, okay, or looking to go long from a key fair value gap. So it could have been this gap here. It could have been anywhere around this level. It's about time, okay? As we're getting closer, where is the closest level? So it's coming down, now we start to consolidate, okay? As soon as we hit this bar here, I enter my trade a couple of minutes before the news, because that there is basically right at that gap, okay? It doesn't have to go inside the gap, and I want to be in close to news as possible because of the slippage that the broker charges, right? They widen the spreads in this time when you're getting closer to the news. So I like to be in a couple of minutes before. If I'm going to trade that, at least 4, 5, 6 minutes before. So if we look at the entry, so the market in that 1 minute before the news release is going down into that gap, okay? But I've already gone long somewhere up here, 2, 4, 5, 6, okay? Let's look at the actual time of the entry, 2, 4, 5, 6.59, and it's 5 minutes before, that's 8:25. 5 minutes before the news release, okay, 2, 4, 5, 6, and that's why I've gone in somewhere around here, right? When it's come down to that gap, it's taken its last piece of liquidity down into that zone, even though we did actually get into that gap and actually took out anyone that was already, we went to that gap there, right, inside there, because it went through this gap. So that was the gap that it was actually targeting, okay? As I said, it doesn't really matter. You don't have to be precise, and you don't even have to trade this, okay? This is for me because I understand price action. As I said, I've managed my risk. I have a directional bias. I'm looking for high of the week. I know that market needs to push higher, and maybe even up to the highs that I've spoken about, up around that 2,500 level, right? We have a lot of liquidity sitting at 2,480. So that's kind of what I'm looking for with this move up. So that's the entry. And my exit on this trade was on a 4-hourly chart, okay? I was looking for these highs to be taken, okay? And that's where the market traded to, right? So as soon as we got that high breached, that's the easy target for me, okay? Sure, the market could have gone up here, but it may not, and we can see that it didn't. But that's the easy target, okay, into this rejection block above this high, okay? This here is a wick, okay? And I was just targeting the highs of here, which is 2474. I think I just went a bit more, 2477. Let's have a look as it went through that wick. What was the exit on that? Yeah, 2477, okay? So the basis of the exit was to move up to the high of that, okay? And that is the high. Why that high? Because that's the high of that swing, right? That is the high of that swing, okay? As I said, I always look for the easy target. To me, that was an easy target. And it's good that I, did that target because we had, after that we moved down, okay? So what's the easy trade in New York, right? I have always said that the high in the New York session is going to be 9:30 or 10 a.m., okay? So knowing that, let's turn off all these lines, okay? Let's have a look at that. So this here, and you're always going to find the market react at every hour or half hour, okay? So I've already exited my trade, as I've said, okay? And now we get to 9 a.m. Look at 9 a.m., okay? So we get to 9 a.m. and 9 a.m. brings the market back down, okay? That's expected at the new hour. You get some kind of reaction. So 9 a.m. comes down. It also has to rebalance all of this, right? This is a large candle. In 1 minute, moved up 200 pips almost, okay? There needs to be a level of rebalancing going on. So this move down is expected, okay? And completely rebalanced when? This is now the second 15-minute candle, right? That 9:15 to 9:30. So the high is going to be made somewhere at either 9:30 or 10 a.m. from my experience. It doesn't happen all the time, but you kind of look for your entries at those times if you're looking for a short. Okay. Now it may not be a short, but there's clues that indicate there could be a potential short. Number one, we are now at the high of the day, high of the week. Didn't tap into the high of the month, which is why I didn't take this short. Okay. I was expecting the market to move a little bit higher, but from a timing perspective, this is now the second 15-minute candle from 9:15. This is the start of that. This is the first minute of the 9:15 candle up to 9:30. What do we get? We're going to move up. Now we're inside of that 9:30 candle on a 1-minute chart. Okay, and we're moving down. This is a low. Okay, no breaking structure. Now we still continue up. Now we have 10 a.m. Okay, 10 a.m. moves up, takes out this high. Okay, moves down. This is all inside the first 15 minutes of the 10 a.m. candle. And what do we have here? We have a breaking structure. This down move has closed below that swing low. Okay, now you could be interested in shorts. So you're waiting for a pullback and you want to see bearish patterns, your bearish signatures. What do we see here? Right, this move up takes out liquidity. This is your down candle prior to this swing high. That is the high made inside of the new hour, that first 15 minutes of 10 a.m. Okay, I don't just short there if I'm going to go short just because we've taken out liquidity. This could still come down, fill in this gap, coming to these two down candles, which are the order block, and go up. Okay, that's my expectation. That this is essentially has taken out liquidity, so higher high, come down into these two down candles on a 1-minute chart, order block, into the fair value gap, come down, go higher, take out these highs. That's the current trend. But what happens? We don't do that. Okay, down candles are no longer supporting price. Okay, down candles are no longer supporting price. We don't get a move under. We get a move under a swing low, and it closes. Right. So this now bearish pattern should hold. Okay, this is your breaker. This is your bearish order block. Breaker structure. We move up into there, right, into the bearish order block. Okay, into the bearish breaker. Okay, what I'd like to see is the market stay within the midpoint. It stops a little bit above these highs. Okay, if I'm doing a 1-minute chart entry, my stops are typically 15 pips. 15 to 20 pips is where I would put my stop. Okay, I'm not going to put just above there. I don't want to see the market trade above there, but my stop is at least 15 to 20 pips above that high, if that's where I'm going to be entering in. So that's way above. That's only, 5 pips is there, 6 pips is there. So it's probably above the high of the day. That's the high of the day. Okay, if I took, that's my entry, because we have a breaking structure, bearish signatures, I'm waiting for the pullback to enter. My stop is going to be from that high up 15 pips minimum. And you can see just to 7 pips is above the high of the week. Okay, but I'll put it up higher, 15, 20 pips. Okay, now let's continue our discussion. So I would be short right there. Okay, because we've come in to this bearish order block into bearish breakout, which is a down candle before the swing that made that high. Okay, and that is coming into on this side bearish signatures as well. Okay, we have the exact same pattern, right? You got your bearish breaker here, you got your bearish order blocks moving down back up into the bearish breaker, bearish order blocks before they move down. Okay, this is coming into that bearish order block. Okay, making another bearish signature, breaking structure, coming up here into the bearish order block, bearish breaker, and then here it goes up again to stop out anyone that may have already put their stops to break even. Okay, I don't like to see it trade above the midpoint. Okay, but stops are above, so we're still in this trade. Okay, had this continued moving higher, then I'd probably look at closing it out, looking for another entry, even though my stop's above. I'm still watching it. If I'm taking this entry, as I said, I didn't take this entry. I didn't short the market. Okay. And that's because I was looking for higher prices, high of the month to be taken. Wasn't really looking for shorts at this point in time. Also, I wasn't looking to trade after my trade where I closed out this long. Okay, that was enough for me. I was pretty tired by that point anyway. And but I want to walk you through the whole purpose of me talking about this is to highlight you don't have to trade the news, right? There are easier ways to enter a trade. You can avoid trading the news, avoid getting to that risk and stressing yourself, okay? Take the easy trades at the right times, okay? At this point, as I said, 9:30 or 10 a.m., that New York session typically makes the high for the New York session, okay? At this point, we're already at the high of the day, high of the week. It's a Friday, right? I've mentioned that pullbacks, reversals typically occur on Wednesday midweek. If they don't occur on Wednesday midweek, then they typically occur on Friday, okay? So today was Friday. And you can see that this 9:30, this second 15-minute candle, we've got this uptrend on 1-minute chart. And we're coming to a key level on the left, bearish signatures, as I've explained. We should move up from here, right there. Those two bullish order blocks and fair value gap from there. So this is important. When your bullish signatures fail, that's when you know, get ready. We may be shifting. Okay. So we're going up, down, up, down, up. Okay. And the expectation would be you're going to be taking out these highs. Okay. Now, you don't need to understand structure. You just look at where are the bullish signatures failing. Okay. So right here, you got 2 down candles that are bullish order blocks because those 2 down candles, we've taken out liquidity. Okay. And we have traded above. So that validates those 2 down candles as bullish order blocks. Okay. You look at this, the down candles are supporting price as price is moving up. So this down candle has come into these order blocks. Price has moved up, right? This little move down has reclaimed this order block, okay? Or we can say it's come and reclaimed this order block, right? These down candles, price is moving up. This order block, okay, has pushed price up. This down candle has been came into this order block. Price is moving up, okay? So this is a valid bullish trend where the down candles are supporting price moving higher. So when you have these 2 down candles, okay, that come into this order block here, that little down candle, okay, price moves up, validates. When you come down to these 2 down candles, what are you expecting? You're expecting the trend to continue up, down, into those 2 down candles and a fair value gap up to take out these highs. But what happens? You don't get that. That's the first time, right, that the bullish signature has failed at the right time. What time? It's at inside of that first 15-minute candle of 10 a.m. 10 a.m. is the key time, okay? And that's come into bearish signatures on the left, which have taken out high of the week, okay? So you've got to take all of that into consideration. Therefore, that's why that's a breaking structure. For that reason, for all those reasons that I've mentioned. Timing, price level, and the fact that a bullish signature has failed. Now, I'm ready to start looking at, to see, is the market now respecting a bearish signature? We move up here, okay? This is now the second 15-minute candle, right? We come into this bearish signature, as I've explained, and I want to start seeing the move down. This is manipulation, but again, it's still coming into a bearish signature. We don't trade above it. And then that is, because this is a new 15-minute candle, right? Right there. That is the first minute of that 15-minute candle, okay? So any 15-minute candle is going to have some level of manipulation. That's the power of 3. 15-minute candle opens, you have that initial manipulation, and the real move comes. Now let's talk about targets, okay? If I was taking this short, as I said, I didn't trade this short, my target would simply be this low here. That is the low that moved up, right? That is enough on this entry, back up into this bearish signature. If I entered there, targeting that low, that's over 160 pips, right? You can target these lows. That's 80 pips, this low, okay? That's over 100 pips, this gap. That's 120 pips, okay? So there's plenty of exits, and these are easy exits, right? So as I said, we could, on this trade down, you could target these lows. This will be a nice low, this fair value gap, or this nice low. Or, I'd have the majority of my position taken off there, and you've seen me do this. I'll take the easy exits, right? Then, if I wanted to, I could have had a runner. This is all hypothetical, right? I could have had a runner to go under that 15-minute low. Where's that? These equal lows here, right there, okay? Because that was a straight move down, okay? So that was a massive move down from those highs down to here, over 360 pips, okay? Similar to the move that I forecasted back on the 16th of July. We had a 360, so we're going to have a plus 300 move. Plus 300 pip move, that was on a Wednesday at the middle of the week, okay? I did not talk about this short, okay? But I hope that helps you understand the 2 entries of the trade that I took yesterday, the Asia long and the New York long, and how you could have traded short on Friday on a 1-minute time frame, stress-free. That short setup I've walked you through that I did not take, it's hypothetical, is a stress-free setup, right? Very easy to identify the entry, the breaking structure, and the target, right? At the right time. As I said, 9:30 a.m., that 9:30 a.m. to 9:45 candle, or the 10 a.m., right? That's where your highs will be in New York most of the time. So that's what you need to look for, okay? You've got to go back and you've got to study these charts. You can't just watch the video for entertainment purposes. You've got to go back, look at your charts, study the charts, mark out what I've marked out, look at how you would have traded it, okay? That's the only way you're going to learn. Go look at the charts as I've done here on the video. Look at it on your own computer. Try to identify the things that I've marked out. Mark it out. Mark out your own times. On your own chart, mark out what I've marked out. Look at these patterns. You've got to print this out so that you can study this. That's the only way you're going to learn, okay? Hope the video was useful. Let me talk a little bit about where I think the market's going for gold. I'll do a separate video on this over the weekend. But I don't believe, if I look at a 4-hourly chart, there's been no breaking structure from my perspective, okay, on a 4-hourly chart. I believe this is just a stop run, okay? And why do I believe that? Let me take off these lines. Because this is the swing low, okay, that made these highs. And you can see the market, the bodies of those candles have not closed below that swing low, okay? The algorithm knows about that swing low. Okay, look at these nice equal lows here. The algorithm targeted those and engineered those. That was those two. That was the 50-minute low that I showed you in Asia. Okay, and look how clean they are, and the algorithm engineered that. It was always going to come down there, right? That was made at 9 p.m. Okay, and the one before that was made at 1 p.m. Okay, so the algorithm was already planning to do this. Isn't that amazing? And now look how amazingly that algorithm has not closed below that swing low. Okay, so structure is still intact. Sure, we might have a pullback, so we'll, I expect the market to go back up to rebalance this. Okay, 2455, and then we may have a pullback. But at some point, I don't believe the highs are in for gold. Okay, these are now to me equal highs. Okay, I've already got a line there, and I've already got a target of 2480. So I do believe that these highs will still be taken. Okay, that doesn't mean that it's going to do that, but that's my opinion. So I don't believe that this move down is a change. Like, I don't believe this is a reversal. I believe this is just a pullback. But I'll do more analysis over the weekend. We could come back up here and move down a bit more. Okay, maybe back down to 2400. Okay, but at some point I do believe next week we'll come back up into these highs. Okay, hope that video was useful. I will now talk with you in a future video.